For regular viewers of my channel, you most likely know that Realty Income has been my favorite real estate investment trust for a long time. I've been a big fan of this company for a while, and really for a lot of good reasons. They're one of only 3 REIT dividend aristocrats that exist, and they're the only ones that pay dividends monthly. They have a 13.4% compound annual total return since their 1994 New York Stock Exchange listing and a 4.3% compound annual dividend growth rate during that exact same time. Realty Income has also never cut their dividend, and they've had 105 consecutive quarterly increases. Their FFO payout ratio is a conservative 73%, their occupancy rating is far above REIT averages at 98%, and they have a very well-diversified property portfolio. I could go on, but after reading so many of your comments, it became pretty clear that a lot of you were sick of me talking about this company so much. It's widely known among investors that Realty Income has a cult-like following, a cult of which I'd consider myself to be a member of for many years. But what I think would surprise a lot of people is that my investment in Realty Income is actually my biggest loser from a financial perspective. I've actually lost more money on Realty Income than any other holding in my dividend portfolio. So in this video, I'm going to show exactly how much money I've lost on this investment to date, and discuss how this happened, why I'm not upset about it, and what I think the future holds for Realty Income and my investment in them. Going back exactly 2 years ago to January of 2022, and after being a big fan of O for a while, I decided that I wanted to earn a much more significant amount of my dividend income from them. I had the goal in mind of earning at least $100 a month from this stock, which, considering their track record, I figured would be a good move. I felt like Realty Income was a pretty safe investment, which I still continue to believe to this day. And even if there are longer periods of underperformance, I wouldn't be interested in selling this investment in an attempt to buy into a company that might be growing faster during a specific period of time. I wanted and still want Realty Income to be a major part of my income whenever I make the decision to switch to living off dividends in the future. The only time I'd consider actually selling this holding is if there was some kind of corporate scandal, or if they did truly do something horrible. Another reason I figured it would be a decent time to buy was because during this time their share price hadn't fully recovered to their pre-pandemic price. In early 2020, Realty Income was trading for almost $80 a share, and in early 2022, it was still trading at about a 13% lower rate. So on January 27th, I bought 304 shares of Realty Income at a price of $68.13 per share. This came out to a grand total of $20,712.16. At the time, this number of shares allowed me to collect an extra $75 per month in dividends. After this large purchase, I kept making smaller purchases into Realty Income until I finally reached my goal of earning $100 per month in dividends from it before I shift my focus onto other holdings. What would eventually happen, and what I didn't expect coming, was the Feds aggressively raising interest rates. Between 2022 and 2023, the Feds were aggressively raising interest rates in order to slow down inflation. What we saw during this time was the fastest increase in the federal funds rate in decades, which was absolute chaos for REITs. As I've discussed many times, REITs are businesses that regularly borrow large amounts of money in order to do things like acquire new properties or make upgrades to their existing buildings. All throughout 2022, the REIT sector fell, with the Vanguard REIT ETF showing a loss of roughly 28% during this time. And during that time, my $16,000 investment in O fell hard. What made things even harder for this REIT was that the management team became really aggressive in issuing new shares, which caused the share price to fall even harder. Because Realty Income continues to be active in acquiring more properties for their portfolio, when interest rates started to rise, it didn't make financial sense for them to borrow a large amount of money to buy properties. All that borrowing would have led to significantly higher interest rate expenses, so they turned to another popular way of raising capital for publicly listed companies, which was issuing more shares of their own stock. There's a lot of benefits to doing this, which include not having to pay higher interest rates or having to work with a bank. But the biggest downside to doing this is share dilution. Whenever you issue new shares of a stock, that means all existing shares lose value because those shares now make up a smaller percentage of the overall company. This causes a stock to be less valuable, and thus the share price falls, and Realty Income did this several times while interest rates have remained high. I wish they'd tone it down with all the acquisitions, considering how much worse the share price has been going down, but I do trust that they got a decent deal on these acquisitions, and it'll help their share price grow once interest rates start getting cut. So I've been willing to put up with some short-term pain now in order to benefit later in the future. Right when Realty Income acquired Spirit Realty in November, their stock bottomed out at roughly $49 per share, and it's been going on somewhat of a rally, and it's now at $54.92. So after the dramatic share price decline, you're probably wondering what my total return is for Realty Income. According to my Vanguard cost basis, I've spent almost $30,000 on shares of Realty Income, and today those shares are now worth $24,303. which means to date I've lost a grand total of $5,574.92 as of the making of this video. That comes out to a loss of roughly 18.66% on my investment. In case you were wondering, Realty Income currently makes up about 15% of my dividend portfolio, and it's my largest holding in terms of total money invested. So why am I not upset about this? Nobody likes to be down on an investment because we'll look at this and go, oh man, look at how much money I've lost. But the fact is, I haven't lost any money on my investment in Realty Income. You only make or lose money on a stock when you decide to sell it. I think the biggest lesson investors can learn from this situation I'm involved in is that it's always better to buy into holdings gradually over time. Ultimately, what happened in my situation was that I was unlucky in buying so many shares at the wrong time. Although I would potentially still be down if I did this, it definitely would have been much better to buy into a holding gradually over time. It's much riskier to dump a large sum of money into one transaction than if I had gradually bought shares over the course of a few months. This is what's known as dollar cost averaging, which is when you buy a fixed amount of a holding despite what's going on in the market or its share price. This is safer because if you're buying at a bad time like I did, you can potentially save a lot of money on losses and it'll take less time for your total investment to recover. Now with that being said, what's the future going to hold for Realty Income? Based on everything they've been reporting, I have no doubt that I will profit off this investment, again assuming some scandal or some serious managerial mishap won't occur. If we compare their most recent investor presentation with one from 5 years ago, you can see just how much they've grown. In 2019, they had an enterprise value of $32 billion and they had a total portfolio count of 5,964 properties. If we compare these numbers to their most recent numbers, we can see Realty Income now has an enterprise value of $56 billion and they have 13,282 properties. So this 55-year-old company has more than doubled their portfolio size in just the last 5 years, making them the 7th largest publicly traded REIT. What's more is that these numbers don't even reflect the Spirit Realty Trust acquisition. Once these numbers go into effect, then Realty Income will become the 4th largest REIT in the world and will become a top 200 company in the S&P 500 by total enterprise value. So with this considered, along with the fact that REITs will recover when interest rates get cut, I have no doubt that I will profit off this investment. I do think the future is bright for this company, and I'll continue to reinvest all of my monthly dividends as well as buy more shares of it. It's been really satisfying to see how each month my total dividend amount keeps growing as I keep reinvesting all of my dividends and the company keeps increasing their payouts every single quarter. If interest rates remain high for a while, then the recovery for Realty Income will obviously take a lot longer to happen. But one thing that irritates me is when I see dividend investors act more like day traders. Dividend investing is a long-term game, so you can't be like, I bought shares of Realty Income a month ago and it's down, should I sell out of it? Everything is going to be fine with Realty Income, we just need to be patient and enjoy the well-covered dividends it pays. But yeah, with that being said, that's going to conclude today's video. If you're interested, feel free to check out my Patreon where you'll find an Excel sheet of all of my holdings updated monthly. Plus it'll give you access to our Discord channel where we discuss higher yielding types of investments. With that being said, thank you all so much for watching today's video. If you liked what you saw, then feel free to hit that like button below and click subscribe if you want to see higher yielding investing strategy content. Again, thank you all so much for watching today's video, and until next time, take care.